For most of us, all we need to build wealth for our future is a pension, often our workplace pension, and a stocks and shares ISA. But both of those terms simply refer to the wrapper, the box, if you like, that our money goes into. But what really matters is where the money in the box is invested, what funds you hold. And today, I want to show you how to find the right funds for you. Hi and welcome back to the channel. My name is Pete Matthew. I'm a chartered financial planner based here in the UK. There are lots of different ways to invest. I don't believe there is one correct way. But I do always say that for most ordinary people, folks who have a passing interest in investing but who are not really into it, in other words, people a lot like me, I think for those people the best option is to find a passive multi-asset fund. So let's break down that term. Passive, well, that means tracking markets rather than trying to beat them. Passive funds are generally lower cost than active versions, and there's a wealth of research that says that most fund managers who are trying to beat the market don't actually do that consistently. And so tracking markets, just trying to mirror them really, is generally a perfectly good outcome for most people. Then we've got multi-asset. Well, that term means that a multi-asset fund won't just invest in shares, usually called equities in the investing world, or bonds or property, but a blend of several different kinds of assets. And it will also usually invest in multiple jurisdictions around the world. So you might hold shares or bonds or property or whatever in the UK, US, Europe, Japan, Asia, emerging markets, and more. So a passive multi-asset fund keeps costs low, spread your money around, eggs in multiple baskets. Remember that? Yeah, that reduces risk, doesn't it? So if we're agreed then that this is a good idea, and you may or may not agree, but this is how I think investing ought to be done for ordinary people, how do we find funds like this in our pension or in our ISA? Well, the first filter that we can use, and that I use all the time to find these funds, is price. So a decent passive multi-asset fund should cost you less than 0.5% in ongoing fees each year. And often you'll find a fund that'll charge a lot less than that, and particularly in a workplace pension where charges are often subsidized. Then the next filter we need is the sector that the funds sit in. And a sector is just a grouping of funds that have similar aims or makeup. And the idea, of course, is that that should make funds easier to compare with their peers. Now, multi-asset funds tend to appear in 5 such sectors, and they are the mixed investment 0 to 35% shares, mixed investment 20 to 60% shares, mixed investment 40 to 85% shares, flexible investment, and then finally, the volatility managed sector. Now, if you're an adventurous investor who is happy to invest 100% into equities, you should also look at the global sector. But using these 2 filters, cost and sector, we can usually reduce the options down in our workplace pension or ISA to find just 1 or 2 options of funds that should serve our needs. So let's dive into the computer and I'll show you how. Okay, here's a website that might look like the one that you get access to on your workplace pension. This one happens to be Legal and General, but you know, whether you're Fidelity or Scottish Widows or whatever, there will be something similar. And you can see this has just a couple of filters. It has type of fund, the fund management style, and the sector here. So we've talked about multi-asset funds, so maybe we could select that as an option and we immediately get fewer options down below. But remember I talked about sectors as well. Now there's a couple of the ones that I mentioned on here. Flexible investment, mixed investment 40 to 35 and 20 to 60% shares. Well, if we're a reasonably balanced investor, maybe we just want this one. Well, with that sector selected, we've only got one option here on this particular workplace pension. Whereas if we perhaps were a bit more of a higher risk investor and we wanted to talk about flexible investment sector or 40 to 85% shares, we've got a few more options, but not many. Now on this particular website, there is no filter for cost. I mean, we could click the passive option, but now you see we've got no funds matching. So you might have to play with this a little bit. But generally speaking, either price or sector. Certainly sector should be your first filter, really, to find a multi-asset fund. Then if price is one of the filtering options, then definitely use that because that will help you choose passive options. But with a workplace pension, chances are your investment options are going to be a little bit limited anyway. So we've chosen 2 sectors here, and there are only 5 funds here available. So we need to now dig into those and have a look and make sure they're set up and made up how we would like them to be. Okay, so this is Hargreaves Lansdown, the biggest investment platform in the UK, and many of you will have accounts open on here already. And their fund finder gives us 4,001 possible funds we can choose from. And we've got filters here like ongoing charge. So maybe we can say we're going to keep our costs of our chosen fund below 0.5% a year. That takes us down to 608 funds, which is a great start. We've got an option here. We can choose between actively managed or tracker funds. So maybe we choose tracker. That's our passive funds that we talked about. We're down to 193. Then we've got sectors here. Again, you can start on sectors, up to you really. But let's say you're a balanced investor and you want to go into the mixed investment 20 to 60% shares sector. Choose that, and we're down to 3 options, from 4,001 down to 3. Click search, and you'll see 3 options here. Not a recommendation, by the way. I'm just filtering funds live on the fly. But you can see how you can vastly reduce the choice of funds available down to just a handful, which makes it pretty easy. If I clear those filters, I'll just do them again. Costs to less than 0.5. Maybe I'll choose a different sector this time. And we'll go for the mixed investment 40 to 85% shares sector. Takes us down to 38 results. That's quite a lot still. It may be the case that if I choose tracker here now, we get down to 0 results. No, down to 5. Okay? So again, we've chosen sector, we've chosen cost, and we've vastly reduced the number of funds available. And any of these that come up with these filters will probably do the job just fine. Okay, so we've sifted our funds on cost and on sector, but what about performance? Now, chances are you'll be able to see when you're doing this how various funds have performed, and that might be interesting, but often this is where people get really hung up. And I have 2 reasons why I think you shouldn't spend too much time looking at performance figures. Firstly, all those performance figures are history. They bear no relationship to what's going to happen in the future. We don't know that. So using past performance to compare funds doesn't make as much sense as you think it might do. And secondly, if we're opting for passive funds, where the goal is to track markets and not beat them, then there's probably not going to be much to choose between funds anyway, because they're all aiming for the same thing. Now, there will be some differences because different funds take different approaches to tracking markets. But if you're interested in digging this deep into this detail, then you're probably going to quickly become bored with this very simple approach that I'm talking about here. So if you just want to set and forget your investment, then opting for a passive multi-asset fund should do the trick pretty well. Now, next time I want to talk about risk, because if you're an inexperienced investor, I think it's really hard to know where to start with how much risk you should take with your investments. So that's next time. But if this one has been helpful, you know what to do. Please hit the like button and subscribe to the channel if you're not already. It really helps me out and I'm really grateful. So thank you for doing that. And please leave any comments or questions under the video here. Please, though, don't reply to any comment that uses the Meaningful Money logo, but that tries to get you to chat on WhatsApp. Those are just scammers. Please report them when you see them. Thank you so much for watching. I will see you next time.